Hello learners. So we are discussing about risk management. Make sure you watch my first video. The first video is based on why one can never lose money on stock markets. A very important video which will open your eyes as to the importance of risk management. ये वीडियो इंग्लिश में है. अगर आपको हिंदी कंफर्टेबल है तो आप मेरे यूट्यूब चैनल में जाके इसी वीडियो का हिंदी वर्जन भी ढूंढ सकते हो. In this video, we will take up risk reward ratio. So basically, risk management, I divide it into two parts. Number one is risk reward ratio and number two is position sizing. This video is about the first part, that is the risk reward ratio. Now once again I will repeat that if you are trading without having knowledge of risk management, no matter how lucky you are, in the end the markets will finish you off. So please follow a risk management system. This is the top secret of top traders. This is the reason why only 2-3% of the traders make consistent money and why the rest of the trader community keeps on losing. So risk management is very key to successful trading. Let us now start about risk reward ratio. So to understand risk reward ratio, I will not be giving you any complicated definitions. Instead, we will understand with the help of an example. Let us say you buy a stock at 100, you place a stop loss at 90 and a target of 110. Now in this case, can you calculate the loss points? Yes, simply the loss points is the buy price minus stop loss. So 10 rupee is the loss points. Similarly, how can we calculate the profit points? That is target price minus buy price. So the profit points is 10. So quite simple, if you buy at 100, you place a stop loss at 90, it means that when the price moves at 90, your stop loss gets triggered and you exit the trade. So the maximum loss you face is 10 rupees. Similarly, what is the target? 110. So the maximum profit you can have is 10 rupees. So the loss point is 10, profit point is 10. So the risk reward ratio is profit points divided by loss points, that is 1. Risk reward ratio of 1 means that you are risking 1 to get 1. You are risking 1 rupee to get 1 rupee. So in this example, you are risking 10 to get 10, so your risk reward is 1. Let us take one more. You buy at 100, you place a stop loss at 95, you place a target at 115. Now your loss points will be 100 minus 95, that is 5 rupees. Your profit points will be 100 minus 115, that is 15 rupees. Your risk reward ratio will be 15 divided by 3, that is 3. In this trade, you are risking 1 rupee to get 3 rupee. You are risking 5 rupee to get 15 rupee. So your risk reward ratio is 3. Let us take one more. Suppose you buy at 560, place a stop loss at 540 and place a target at 600. Now your loss point is 20, your profit points is 40. So your risk reward ratio is, you can calculate it easily, it is 2. You are risking 1 to get 2, you are risking 20 rupees to get 40 rupees. So this is how risk reward ratio is calculated. Now let us come to this part where we are short selling it. It is very easy. Once again, let us say that we are short selling a stock at 350. We are setting a stop loss at 356 and we are setting a target at 330. Now your loss point is simply your stop loss minus selling price. This is the maximum loss, and your profit points is your selling price minus your target, that is 20 points. So the maximum loss is 6 rupees, 6 points, and the maximum profit is 20 points. Risk reward ratio is profit points divided by loss points, that is 3.33. Once again, one more simple example. You are selling at 200, setting a stop loss at 210 and a target at 180. So your loss points is 10 rupees, simple, and your profit points is 20 rupees. So your risk reward will be 2. Right? So this is how risk reward ratio is calculated. Now my request to all the learners, to all the traders is that in each trade you take, try to keep your risk reward ratio constant. That means if you are looking at this risk reward ratio, that is 2, if you are finding it good for you, your trading style, then try to keep it constant as far as possible. It will give a consistency to your trading results. For more details, you can check out my risk management document. The link of that document you can find in the description box below my YouTube video. You can download it. Before each trade that you take, you follow each and every points given in the document, and you will see a considerable improvement in your trading results. One more important thing is, whenever you take a trade or whenever you are analyzing an opportunity, always have a stop loss and a target price at that very moment. It is my policy, and I recommend this to everyone, that whenever you take a trade, on that very moment, on that very second, try to set your stop loss and your target. That means that when you are into a trade, when your trade entry gets triggered, immediately set your stop loss order and also place your target order. Then forget that trade. You will see that the results you get are astonishing. If you do this consistently, you will see a great improvement in your trading. Now this video is for my classic trading course members. If you have gone through the opportunities chapter, you must have observed that when we analyze a trade opportunity, we first decide the stop loss. By deciding the stop loss first before the targets, we have an advantage of fixing our risk reward ratio the way we want it. Yes, once again I am repeating, when we set our stop loss before we set our target, like the way we have learnt in my course, we have an advantage of setting the perfect risk reward ratio and the way we want it. Now I suggest to all my course participants to predetermine a risk reward ratio and keep it constant. It is not optional, it is mandatory to keep it constant. So now you will ask, what should be the risk reward ratio in each trade? What should we keep it? So I personally suggest keep it 1.3. Now how do we keep it? How do we maintain it? Now in our trading style, we first determine stop loss. Now let us say we are taking a trade we are having an entry at 250, we are buying a stock at 250, and we are determining an important level for stop loss at 242. Now if we get these two figures, the buy price and the stop loss, we can easily determine the loss points. The loss points will be 250 minus 242, so 8. Now we want our risk reward to be 1.3. So what we will do is, we will multiply loss points with risk reward ratio, that is 8 multiplied by 1.3. We will get our profit points. Now we can easily determine our target price, that is buy price, plus profit points, that is 260.4. So in this trade, when we take a trade at 250, when we buy it at 250 and have a stop loss at 242, then our target should be 260.4. So as soon as you take this trade, as soon as you enter this trade, you have to place the stop loss order as well as the target order immediately. No if, no but, immediately. And when the price hits that level, you should exit that trade. No greed, no fear, no hope. Strict risk management system. Let us take one more example. Suppose you are buying a stock at 1050. You are identifying a stop loss at 1000 rupees. Now you get the loss points as 50 rupees. Now we want our risk reward to be 1.3. What will be the profit points? Profit points will be loss points multiplied by risk reward ratio. It will be 65. Now we can get our target price. it will be 1050 plus 65, that is 1115. So whenever you enter this trade at 1050, immediately you place your stop loss at 1000 and your target price should be 1115. Now let us move to the short selling case. Let us say that we are short selling a stock at 320. We are identifying a stop loss at 335. We can calculate the loss points now. 335 minus 320. The loss point is 15. We want to keep the risk reward as 1.3. Now we can get the profit points, that is 15 multiplied by 1.3, 19.5. So the target will be sell price minus profit points. So the target will be 300.5. So when we short sell a stock at 320 and we have a stop loss at 335, the target should be 300.5 to maintain 1.3 risk reward ratio. In this video we took risk reward ratio. In the next video we will be covering position sizing. In position sizing we will be determining how to calculate quantities to trade, what quantity to trade in each trade. That is what is covered under position sizing. So I hope risk reward ratio is completely clear. Now I want a commitment from you. I want you to message me that, sir, I promise that I will keep my risk reward ratio as 1.3 in all my trades from today. Send me a message, a WhatsApp on this number. You can connect me on Telegram as well as Twitter. But I want a commitment from you that you will have your risk rewards ratio fixed in each trade. This is very, very important if you want to be a consistently successful trader. My contact details are given in the description box below this YouTube video. In case of any queries, questions, feedbacks, you can contact me. You can connect with me on Twitter, Telegram. You can subscribe to my YouTube channel to get regular updates. If you find this video helpful, you can share it among your friends so that they can be benefited. This video is aimed at protecting the retail investors who do not know anything about risk management and they end up losing big amounts in stock markets. In the next video, we are discussing position sizing, and after that, your risk management will be complete. Thanks for watching. Goodbye and happy trading.